Welcome in, welcome in. How is everybody doing today? Can everybody hear me okay?
Gotcha, Greg.
Hey, Patrick, how are you?
Doing well. Thanks for hosting this again.
Yeah, absolutely. Let's see. You can you see my screen okay? I think Jose's on the call. He may still be on mute. Can you see the screen okay?
Yeah, I got your slide Q1 2026.
Perfect. Well, we'll give it a few minutes. Let some folks that might be wrapping up some calls or lunch. It is lunchtime on the West Coast. And then we'll jump into it. Looks like we got somebody else jumping in. Hey, all right. I recognize that name. Hi, Stephanie. Looks like she's connecting. How are you, Stephanie?
I'm good. How are you?
Good, good, good. Okay, good. My volume was a little low. We'll pick that up. Doing pretty good. It's a really nice day here.
Yeah, it is here too. It's beautiful out.
Yep. I think what are we at? 82, a little windy, 82, but a little windy.
Yeah,
It's nice though.
we'll take it while it lasts, because it's just gonna
Absolutely.
get hotter from here.
Yeah, no, absolutely. Yeah, we'll give it a few more minutes. This is being recorded, by the way. So all the fun questions and things that we talk about will be there. But we'll get started here in just another minute or so. I want to give a few more folks an opportunity to jump on. I know folks could be wrapping up on some calls and it could be lunchtime, so we'll give them a few more minutes and then we'll go ahead and dive in. I think for the next quarter, I'm gonna have to have some background music. We're getting this to evolve every single time, so we'll work on some background music because you definitely don't want me singing. Oh, there we go. Hi, Shauhan. I'm glad you can make it. Small world. We're almost neighbors. That's fun to know. Okay, so I'm gonna go ahead and we'll get this thing kicked off. If anybody uh, jumps in, we'll make sure to admit them and get them into the Zoom. But let's go ahead and get it all kicked off. So everyone, appreciate you taking the time today to join our Q1 2026 investor session here at Milestone. It's our second one, so we're excited to keep these going. Um, let's see. Oh, Shahan says hi to the group. Let me got to put the chat somewhere so I can see it. She says hi to everybody. But yeah, so what we're gonna go through today is we're gonna talk about a quick little Q1 update, what we're seeing in the market, what's happening operationally on our end, which is always fun to talk about, and kind of most importantly, what is this kind of looking for you as an investor kind of going into the spring. So why don't we kind of jump into what we've got lined up today? And let's make sure, can y'all see? There we go. Can y'all see the agenda? I want to make sure that the slide is working. Thumbs up, we're good? Awesome. Okay. So today we're going to go over some quick little introductions. I think it's a great way for us as an investor group, not only to know each other one-on-one, but maybe know the folks that have been regulars and are going to be in these. We're going to go over some company news and metrics. You'll get the North Texas real estate market kind of update of what we're seeing. And then I apologize, I had a pop up. And then we'll kind of talk about the different ways that we look at analyzing a deal. And we'll go over any questions that everybody has because everybody's investment strategy is a little bit different. So we'll open it up to some Q&A. All right. So let's jump into it. So let's get to know each other. So I'll go first, just to make sure everybody knows. My name is Greg Parks. I am the sales manager here. So I take care of anything sales related here at the brokerage. So helping you buy or sell any of your investments or any of your personal properties as well here in North Texas. I work on the front end for our consultations for our owners that are looking for our PM services. So I encompass anything that is sales related. I live in Anna, Texas. So that is about, I don't know, 35, 40 minutes, maybe 45 minutes, kind of south of Denison, but work and do everything up here in kind of Grayson County. And number of rentals, well, I don't have any of my own personal rentals quite yet, but looking to grow that obviously because I love the work that we do in the industry that we're in. So if anybody would like to jump off of mute and kind of say hello to the group, I'd love to give everybody an opportunity.
I'll go, Greg.
Awesome. Thanks, Stephanie.
Hey, I'm Stephanie Corso. I live over on the Emerald Coast of Florida, Santa Rosa Beach area, and have some properties in North Texas with Milestone. They've been awesome. I have 3 rentals with them right now, and just trying to stay in touch. And it's great to have a team that you can trust that is out of state, and kind of keep my finger on the pulse of what's happening in that area. So grateful for these meetings and happy to be here. Thanks, Greg.
Awesome. Thanks, Stephanie. I know Shauhan doesn't have a microphone on that computer, but her and her husband, they are here locally in North Texas. They also live in Anna. Found that out. We are neighbors. And I know that they just brought on another property with us. So really excited to continue the relationship with them. Jose, are you able to jump on and say hi to the team or the group?
Hello everybody. My name is Jose Lazala. I live in the Dallas area. Well, I stay in Grand Prairie. I have one property up there in Denison.
Awesome. Well, welcome to the Zoom. Happy to have you.
Thank you.
Patrick, I know that you don't have video, but there you go.
Yeah. So Patrick and Naomi Inkin, we are located out of the state of Washington, so up here in the Pacific Northwest, and we have 3 rentals with Milestone and been with them. Man, it's almost been a year. It feels like it's flown, but yeah, that's our story.
Yeah. Well, Patrick and Naomi, we love y'all and thank you for joining on the call. So, I mean, as you guys can see, we actually have a nice little mix. We've got a couple of local folks here, and then we're representing both coasts, it looks like, as well. So, and everything in between. So happy to have you guys in here. Thank you so much for taking a minute and introducing yourselves to the group. So let's keep it rolling. So next we're gonna jump into the company news and metrics. I'm gonna start with the performance, and this is kind of the stuff that's really important and that should matter to y'all as owners. So I took some of the key metrics that we're working on right now, but as you can see from the screen, we're sitting at around a 98% occupancy rate, which is really strong given the current market. Just to give y'all some insight, we crossed the 365 door threshold last month. So sitting at 98% occupancy across our 360 plus doors is really, really exciting for us to be able to share with you, knowing that we're doing what we can to get these properties leased for y'all in a good time frame as well. Um, you're going to notice another key metric is 2.9 days median repair time. So that's the speed and the speed that keeps the tenants happy. So when they're reaching out, I know some of y'all may have more requests than others and vice versa, but when these tenants are reaching out, this is the speed that we're doing it right now at 2.9 days to resolve the maintenance ticket that is being sent in, which is really, really strong. And then we also, when we do those maintenance repairs and those tickets come in, we're getting a 4.9 out of 5 resident satisfaction, which is huge because they're letting us know that they're satisfied, almost extremely satisfied with the way that we are approaching and handling and resolving those tickets. And that directly speaks to, retention, the turnover that we like to avoid, and your vacancy. So really, really nice to have. When it comes to the 2.9 days, you're going to see a little note in there that we're ranked kind of in the top quartile nationally for how quickly we can address and handle those tickets. That speaks to the relationships that we have not only with the owners and being able to communicate back and forth promptly, but also with the vendors that we put time and effort into to get the right folks that represent, us here at Milestone, y'all as the owners out there to resolve the first time, get it done right type of a scenario with these repairs. So it's really, really nice to know that nationally we're ranked really, really high in our speed to repair. Also, this past quarter on the operations side, we brought on Bree as our maintenance manager. She has previously owned her own property management company. She sold that, and we've been able to bring her on, and she's been a big, big addition with the knowledge, specifically in the maintenance side of the house. It's a big focus for us right now. I think we mentioned it in our last call about building an in-house maintenance team. So with her coming on and really honing in on the areas of efficiency for us on the operations side, it's really, really nice to have her. And like I mentioned with the building the in-house maintenance team, what is that going to mean for y'all as owners? And we've had a few of us have had these conversations, but it's going to equate to faster turns, better quality control, and lower costs over time. And that's something that we've been paying attention to, and we know that is a big concern and a big area of focus. And we are targeting Q3 for that rollout. So now, why don't we go ahead and we're going to jump into something that can directly kind of impact your properties as we are transitioning that time of the year. We're going from winter to spring. So, and that's spring maintenance. So this is one of those areas where a little bit of proactivity can really save a lot of money. So we're recommending at a minimum HVAC services, checking and cleaning out the gutters, basic exterior checks. A lot of costly repairs we see could be avoided with a little bit of simple maintenance, right? Not to say that we don't expect the tenants to stay on top of it, but as we know, that's not always the case. So if there's an opportunity for the owners to avoid bigger obstacles or maintenance issues down the road by owning some of that, by all means, we encourage that. If you're not already set up on recurring services, now's the time. You can reach out to our maintenance team at any time, and we'll get everything kind of scheduled and set up for you. So again, as we're kind of transitioning into that time of the year, getting those ACs serviced, making sure that they're cleaned out, those filters are changed, going around and doing those basic checks, they're going to be those lifesavers. It's no different than you're going to hear me use this analogy all the time. Change our oil in our cars and we rotate our tires and make it last. Same thing with those major components of your investment properties. All right, so transitioning from that, I want to kind of just jump in and zoom out and talk about what's happening kind of in the market. That's really important. I know that I've had conversations with a handful of folks, but the North real estate market, and this is where things kind of have shifted a bit and kind of what we're seeing. So as a county, as Grayson County as a whole, we're 80 days to lease. And in some markets like Sherman and Denison, that's kind of what you're seeing. It's like 80 plus days. For the quarter, Milestone was sitting at about 45 average days on market to lease, which is really, really good. You know, we're about half of what the county average is. Um, duplex rents are coming in lower than they, previously were, and rates for purchases are kind of still sitting around the mid to low sixes for those that are looking to still acquire properties. The big drivers right now that we're kind of seeing is affordability. It's still the front of everybody's mind, and just general economic pressure. So, kind of what does that mean from an investment standpoint? Tenants are being more selective, and pricing correctly is more important than ever. Overpricing right now will cost you more in vacancy than you're gonna get in rent. If y'all could just let me know if you see the PowerPoint again.
Got it.
Okay, I'll go ahead and again, I apologize for the disconnect, but I'll go ahead and take a step back and we'll take a look at this again. But so as I was saying, the what we're seeing, things have shifted a little bit here in the North Texas real estate market. We're seeing about 80 plus days to lease in some of our submarkets like Sherman and Denison. Duplex rents are coming in a little bit lower than they were previously. And mortgage rates are sitting kind of still around those mid sixes. The big drivers right now are affordability and general economic pressure. So kind of how does that translate and what does that mean for y'all? Tenants are being more selective and pricing correctly is more important than ever. So overpricing a property right now will cost you more in vacancy than you gain in rent. So there is a lot of competition out there. Pricing strategy is extremely, extremely important. And on top of that, along with the single families and the duplexes and the multifamilies that we have, we're also competing against, there's a lot of apartment complexes that are going up. And those folks right now they've got great incentives. So if pricing isn't on point, we could lose some of the tenant pool to saying, I'm just going to go and get an apartment and we'll see how things kind of adjust. A couple of things just to kind of share, like I mentioned, we're seeing about in Grayson County about 80 plus days to lease. Milestone for the quarter, we were sitting at about 45 days on average was kind of our number. There were, some weeks where it was higher and some weeks that were, substantially much lower. But for us to be almost half of what the county average sits at, that's a really, really strong number for us to be at. And it just goes to show that we really take getting your properties leased very, very seriously. And we want to make sure that you are not losing money on your investments when you're doing that. The little graphic that you guys can kind of see on screen, kind of that 3-bed, 2-bath, single family home over the past 90 days. You can see where the days are a little bit longer in Denison than they are in Sherman. But the price per square foot is relatively kind of the same. I always tell folks, I said, you can kind of, depending on the neighborhood and the area, you can kind of just assume that you're going to get about $1 a square foot. You can see that on average it's a little bit higher, but if you can make the numbers work around $1 a square foot right now, you're usually going to be in a pretty good spot. So you can take a look at those numbers. I'll keep that graphic up there for just a minute longer. A couple of other numbers that I put off to the side that I thought was important and really fun to share. So for Q4, from October of 25 till the end of 25, Grayson County as a whole had 282 total rental properties leased out, closed listings, as we like to call them. Today's the last day of the quarter, so obviously we could be a few more, but for Q1 of 2026, Grayson County has seen over 360. So rental demand is there, it is up. So that's a good thing to know that there's still a lot of tenant pool out there for you. Denison had about 118 total rentals for the quarter. Sherman had about 170. Your average rent for Denison is probably 1,550 to 1,600. Again, depending on the type of home you have. And then the average rent in Sherman is probably 17, maybe 18. Same thing, depending on the property and where it's located, but that's kind of what you can expect. On the buying side or selling side, because again, I have conversations with a few of y'all about all of that. The average listing price for a house in Denison right now is $243,750 with an average days on market of about 90. Okay. For Sherman, the average listing price is 320,000 with average days on market of about 77. So Sherman is seeing quite a higher number for price to purchase the home, but it reflects it a little bit more in the rental as well. Denison had an increase in overall inventory. So there's 318 total available homes, and went up to 418. So inventory obviously has gone up, but at the same time, when we're talking about buying and selling, it's still a buyer's market. It's still a tenant's market. So we have to keep that in mind when we are looking to sell a property. I heard a saying, and I've been using it for a few weeks now, and we want to keep this in mind, but everybody's looking for a deal, but nobody wants to sell it a deal. And if we're thinking about buying, absolutely, this is the best time to add to your portfolio. You're getting prices on properties that are going to appreciate, right? But if it's that life cycle or it's that time to move on from a property, we also want to be very, very aware, like it's not gonna be the price that it was a few years ago, right? So we want to keep that in mind if that is something that we need to have that conversation on. So, but yeah, some really good numbers for North Texas and what we're seeing. And yeah, I mean, I'll pause right here. Normally, there's questions around kind of the numbers, but does anybody have a question on the numbers and kind of where we stand before we kind of jump into the next session or the next topic? Okay. Again, if anything kind of pops to mind after the fact, every single one of you has my direct contact number. Please, shoot me a text, give me a call, set up a time to chat. We can definitely talk individually, but some really nice numbers for everybody to see. And then kind of the last thing that we want to kind of go over is, analyzing real estate deals. So what we love here at Milestone is we deal with a wide variety of investors, right? Not everybody's investment strategy, investment journey is the same. Some folks are very purposeful and they got into it a particular way, and others, may have been an accidental landlord, right? So we want to make sure that we analyze and we are on point with how we want to treat and grow that investment, right? So the four different ways, and again, it's not always about price, right? Price is important, right? We want to buy the properties at the right value, or we want to understand, what they're going to rent for and understand, hey, I may have not bought it as an investment, but if I can get all or most of, let's just say, the mortgage taken care of buying it by a renter that helps me in the situation that I'm at, whether I moved for a job or, life happened, we want to be able to do that. So the four different ways that we're really kind of looking at a deal is appreciation, right? So the projected increase in the value of property over time. We have quite a few investors that if they can get too close to a break even, they are looking for the asset itself to appreciate. They are truly in it for the long haul. They are going to be in it, excuse me, and they're not looking to move the property unless, something really, really drastically changes. Cash flow, your net monthly income after all expenses are paid. That is important, but that is another area that we look at for the deals. Cap rate, right? It's a quick measure of your return that you're gonna get on that property. You do that by dividing the net operating income by your purchase price. Again, some of you are extremely familiar with that. Some folks that are on the call or maybe watching this later, these are terms that are probably still new to them. So I want to make sure that we go over that with them. And then your expected expenses. This is always a fun conversation to have because, again, some of our investors are in different stages or they have different strategies, so their expenses are going to be different from others, right? I talked to an investor where they calculated that their expenses were probably closer to 40 or 50%, but that's based off the strategy that they use. And I also talked to other investors where they really, really, really try and stay close to that 30 to 35% of your expenses. And what are we talking about when we're talking about your expenses? Is everything from your maintenance, your repairs, capital improvements, your insurance, taxes, all of those, all of your all-in expenses. If you can keep that number, we like to say is around a 30, maybe to a 35% number, conservative number, then you can confidently calculate how you're going to do in a deal, right? So again, depending on what your strategy, could be, are you buying for cash flow, or is it a long-term appreciation value add? It could be a combination of the two. Because the deal is all going to make sense depending on how you do that strategy. So wanted to take a minute because we've been having conversations lately as folks are looking to purchase and are also looking to sell. We want to let them know that this is how we analyze a deal, whether they purchase the property without the assistance of a realtor, or they bought it and the information was a little bit different and how the approach was. We want to let them know that, if they're buying or selling, this is how we're going to analyze deals for them. And you let us know that strategy, and then we're gonna adapt and customize our thought process and our not our projections, but the way that we go through that particular deal with you. So that's really kind of the framework that we're using right now when we evaluate different opportunities. But yeah, wanted to touch base on that. So I know that we had a weird little technology glitch, but I'm glad everybody was able to kind of jump back on. Just want to kind of open it back up here for what questions that y'all may have. It could be about your current properties, the market, maybe anything that we covered today. And if it's something that we need to kind of table and have a specific conversation on, we can put that on the calendar as well. So want to open it up to y'all that are still on the call, and y'all can let me know if you have any specific questions.
Hey, Greg, Stephanie here. I do have a question.
Yeah.
What are you seeing, particularly in the Denison area, as far as, any job growth, I know Sherman, there was a lot going on and they thought it would spill over into Denison, and, there was a lot of talk about that. Are things just kind of stagnant, or what are y'all seeing as far as progress, no progress
Yeah.
happening, as far as, a housing need or, jobs, really?
Yeah, no, that's a great question. So from the job perspective, those are more of a future, right? So you've got, like we mentioned before, you have Texas Instruments that is finishing up their kind of like global HQ. You've got Globee Wafers, and there's other companies that are moving, but that is all coming. So the
So they're
job
not
growth
actually
itself,
hiring
yeah,
yet. They're still
they're
in building.
not actually specifically, there's not mass hiring yet,
Mhm.
because they're not there yet. But as far
Okay.
as progress, if there was a way for Google Maps or the satellite views to be updated daily, it would be so cool. But if you could see some of the infrastructure growth that is happening, right? Like I'll be taking a detour that is, you know, substantial for me to get back to the main highway. They're expanding the highway out here. You have a lot of, like we talked about, there's a lot of new build growth that is happening, right? So there's expectation and anticipation of that coming. I mentioned
Mhm.
earlier some of that competition that you're having with those apartment complexes. A lot of those are being built up right now, again, with the anticipation and the expectation of that growth that is coming for future jobs. But
Mhm.
at the same time, you have folks that are moving up here because of the affordability and the cost as well, both from a purchase perspective and a rental perspective, and still driving back south into, the Melissa, the McKinney, more of the bigger bustling cities that are south of where we're at for work. And I'll give you a really, really good example. I don't know if I've mentioned it directly with you, Stephanie, or it was a different investor when we chatted. So my son is in daycare, and he goes to a newer daycare that is in the city of Melissa. It's probably 45 minutes south of us. He was in a classroom for a short period of time just due to his age. He transitioned out of it. But one of the teachers in that classroom lives a little over an hour away north of us. I'm not sure the exact city, and I didn't ask, I didn't want to pry, but she lives over an hour away and she drives into Melissa for work. It's not an issue for her. She doesn't hate the drive. It pays well. It's that balance, right? I know another one that lives in Sherman, that it's ironically the next classroom he's going into. So I've already started, those introductory conversations with the teachers, like, hey, how are you? She drives from Sherman every day down to Melissa, Texas. And again, that's depending on morning traffic, it's a good 45 to maybe a little over an hour drive,
Mhm.
right? Especially with construction. So you have two fronts. The job front is coming, right? There's projections all over North Texas with AI companies and the investment that's happening there, with the tech companies that are already starting to build. And then you have folks that are still moving further north for the affordability aspect, whether it be purchasing or renting, and then still driving back down to where all of the work still is. So
Okay.
I hope that answers your question.
Yes, it does. Thank you.
Yeah, absolutely. Absolutely. Thank you. Uh, Anybody else got a question or anything they'd like to ask? If not, again, thank you all for jumping on. Please, if you have an opportunity, if you want to shoot me an email, if there's anything specific that you'd like us to see on these calls as we are evolving through them and putting these on for y'all. We definitely want to give you market updates. We want to give you operational and company updates. We want to let you know what's happening with your properties. Please let us know. We'd love to craft these in a way that we can get everybody to help join. But thank you again. I'll give you guys some time back into your day. And let me see, we do have a chat. Let me see if we have a question. Oh, thanks, Shauhan. I appreciate it. I know that you don't have a microphone. But thank you everybody for joining the Q1 investor session, and we look forward to the next one with everybody.
Thanks, Greg.
All right, thanks, guys.
Thank you.